Quick disclaimer before we get started. I am not a financial advisor. The purpose of this video is to document my investing journey and to give you all some insight on what I like to do with my money. If you are in need of financial advice, I would recommend meeting with a financial advisor. Now that I've got that out of the way, I hope you enjoy the video. Hello everyone, and welcome to episode 7 of my monthly portfolio update. This month, I will be doing something a little different. As you may have seen, I have missed the last 2 months of portfolio updates due to being busy with school and work. I plan to make up for this by covering all the changes made in my portfolio over the course of quarter 1, as well as cover the dividends. As all of you know, I started a job in January, which allows me to contribute to my portfolio again. I also secured an internship for the summer, so that is fantastic for me. A lot of change has come to my portfolio since you have last seen it, and I'm excited to share it. Finally, I hope for this to be the one and only time I need to do a quarterly update. In other words, monthly updates will resume after this update. With all of that out of the way, let's move on to the portfolio update. Quarter 1 was big for my portfolio. I wasn't expecting to see what I got, but at the same time, I really should have. There was an overall growth in the market after a bad 2022. Last year, I think I lost about 16%. A year ago today, down 5%. So far this year, I am up about 4%. I started contributing to my portfolio again, and have been investing as much as I can. I also decided to comb through my portfolio in late January and made some changes that I will share after the dividends. Speaking of which, in quarter 1, I made $90.50 with $5.67 from QYLD, $4.26 from Altria, $1.42 from Realty Income, $1.31 from Stag Industrial, $6.25 from National Health Investors, $3.05 from JP Morgan Chase, $6.02 from QYLD, and $1.82 from SPDR's S&P 500 ETF. This all contributed to $29.80 out of the $90.50 made in quarter 1. Moving on to February, we have $1.51 from Verizon, $2.76 from AT&T, 53 cents from American Express, $1.32 from Stag, $1.43 from Realty Income, 36 cents from Apple, and $4.63 from Starbucks. This all totals up to $12.54 out of the $90.50 we made in February. Moving on to March, we have $3.50 from Intel, $1.05 from JM Smuckers, 86 cents from Kroger, $1.18 from Johnson & Johnson, $2.77 from Microsoft, 51 cents from ExxonMobil, $5.86 from Walgreens, $2.86 from 3M, $1.90 from MetLife, $1.32 from Stag Industrial, $6.38 from McDonald's, $1.47 from Realty Income, $1.59 from Wendy's, 69 cents from Vanguard's High Yield Dividend ETF, $4.63 from Vanguard's Total Stock Market ETF, $7.38 from Vanguard's S&P 500 ETF, $3.12 from Vanguard's US REIT Fund, and $1.18 from PepsiCo, which totaled up to $48.25 in March, aka a strong contributor to the $90.50 I made in quarter 1. Almost all of these dividends were reinvested, therefore contributing to the compounding process. But I also made some significant changes to my portfolio. In January, I sold my shares of Schwab US Broad Market ETF, Yum Foods, Moody's, American Express, SPDR S&P 500 ETF, and all my shares of QYLD. Ultimately, in the end of January, I was doing some research on the companies I had in my portfolio and determined that there were some that I just didn't want in my portfolio anymore and reallocated the money. In earlier videos, I will recognize that I was a huge fan of QYLD. While I still do like the dividend that I was getting from QYLD, I felt like it was distracting me from my overall goal. It's very easy to fall into dividend traps like QYLD, and I believe that I could manage it, but there was too much conflict of interest in my mind and heart, therefore I sold. The only other surprise you may see is me selling my shares of SPDR's S&P 500 ETF. You'll see where I reallocated this money, but ultimately this sale was due to a higher expense ratio from where I'd rather have the money. The money from selling was reallocated into 7 companies with $75 going into Walgreens, $75 going into Intel, $299.71 going into Vanguard's Total Stock Market ETF, $174.49 going into PepsiCo, $124.50 going into MetLife, $125.37 going into JP Morgan, and $782.26 going into Vanguard's S&P 500 ETF. At that time, I was very happy with where the money was reallocated. And to be honest, I'm happy where all the money was reallocated, except for one of them, but I'll cover that later in the video. One thing I've been saying to myself since the end of 2022 was that I wanted to balance my portfolio to 50% ETFs and 50% equities. If I go over to my Robinhood and go to my profile, we will see that as of April 10th, that I'm currently sitting with a 69 to 31% split. This is a lot better than it was in the beginning of January or in late December. Hopefully I showed it in one of those portfolio updates. And I'm happy with the path that I'm going. Whenever I talk to people about investing, this is always what I recommend, and it always just felt hypocritical that I was not also doing so. As you can see, I'm not here yet. But this is something I plan to be done with by the end of 2023 at the very least. The earlier, the better. And as you saw, one of the companies I added when I sold off 6 of the companies that I previously owned was PepsiCo. And this is a stock that I plan to hold very long term and build up into my portfolio because it's a massive consumer conglomerate with hundreds of brands that sell hundreds and hundreds of products that everybody loves to buy. PepsiCo also has a really strong dividend. I think in June it's being increased to like $5 and something cents annually. That's incredible per share. And they have high free cash flow production with low debt levels. And debt levels that I find safe to have because of high interest coverage. Ultimately, PepsiCo is a company that I really hope becomes a mainstay in my portfolio and becomes a true pillar of it moving forward. Moving on to February, I bought 2 more stocks in my portfolio. The first of which being Vanguard's High Dividend Yield ETF. This is somewhat of a QYLD replacement, but not really, as it doesn't pay monthly dividends and the dividends aren't sky high. I'm just particularly a fan of the Vanguard suite of ETFs. As you know, I own VTI, VNQ, and VOO, and I figured what's gonna hurt with a 4th ETF that is related more to dividends. I hope that this becomes a pillar of the ETF side of my portfolio. The other company I decided to invest in is Enterprise Product Partners. I decided to invest in EPD as I wanted more exposure in the energy sector, and I was honestly recommended this stock by a friend. Now, I know what you may be thinking. In the last video, I talked about how I don't really like to listen to people about investing anymore because of how I've gotten burned. And the reason why I decided to actually listen this time is because me and him both have a fondness of dividends. I've noticed that dividend investors often have thoughts that align with mine, so I will typically give the ideas a shot. I went home that night, did some research, looked at the financials, looked at what they're doing moving forward, and I love the position that they are in. This is a position that I'm looking to build sooner rather than later. Moving on to my dividend calculator, if you look at the closing share price for EPD April 10th, 2023, and the dividend that'll be declared on the 27th of April, and you divide the two, you'll find that you will need 54.16 shares to form a compounding process with EPD. This roughly multiplies out to $1,437, and that is to get $26.54 in dividends every quarter. That is really cheap compared to some of the other companies you'll see on this list. If you look at Microsoft, you have $91,000 for a compounding process, and this price is outdated. I know the price is more like $290 right now. That's insane. But with how cheap EPD is, it's really caught my eye and something I want to get a hold of sooner rather than later. You may also note that AT&T's is also really low, but I think EPD is a little bit of a safer company moving forward, and I'll look to build that AT&T position at another time. Now, moving back to my Robinhood, there's something I need to discuss. I sold the company in February. I no longer hold Intel in my portfolio. I'm sure you already know why, but I'll cover it right now. Intel cut its dividend by 66% in late February. This means that its dividend of 36 cents or 36.5 cents is now looking to be more like 12 to 13 cents. That absolutely shatters the reason why I'm invested in the company. I thought that they were going to be able to make the turnaround, pay a high dividend, and regain that market share that they lost to TSMC. But it turns out that in order for them to make up the ground they gave up to TSMC, they had to put a lot of money into capital expenditures, which ate into the free cash flow, and now a dividend cut. I'm going to be honest, this is one of my bigger mistakes when it comes to investing. I jumped on at a terrible time. I jumped on right before an earnings release that ended up being absolutely terrible, with their management team just being incredibly disappointing. I should have sold then and there and left it. But I was starting to believe in this story of turning the corner, and it bit. It was upsetting to have to sell this company, but it's the nature of investing. Not everything works out. You guys have missed out on a lot of buys. Let's go ahead and cover those. Overall, for quarter one, I invested $7.48 in the AT&T, $75.38 in the VNQ, $1.39 in the VYM, $500.53 in the VOO, $500 in the VTI, $246.99 into Enterprise Product Partners, $85 in the VOO, $85 in the VTI, $50 in the VYM, $50 in the VNQ, $30 in the AT&T, $20 in the National Health Investors, $53.60 in Enterprise Product Partners, $50 in the AT&T, $85 in the VOO, $85 in the VTI, $50 in the VYM, $50 in the VNQ, $30 in the EPD, $177.50 into Walgreens Boots Alliance, $177.50 into EPD, $25 into Vanguard's High Dividend Yield ETF, $75.03 into VNQ, $85 in the VOO, $85 in the VTI, $50 in the VYM, $50 in the VNQ, and $30 in the EPD. I have invested a lot since we have last spoken to each other, and this is also my new cost basis schedule, where I have my list of goals: $550 in dividends, making ETFs over 50% of my portfolio. I want to hit $20,000 invested, which I think is very obtainable with the pace that we're going, and get this savings and invested to 60%, which I think is doable considering we're at 51 right now. This is also where I would like to take a moment and add some additional information. Sometime last year, I convinced my parents to try a similar strategy to mine on their own Robinhood. Their money was not growing fast, and I figured the growth would be faster if I compared their Robinhood with mine. They agreed, and we did this in February. Specifically with the $1,000 invested was the beginning of my quarter one buying spree. Ultimately, I keep track of everything in the spreadsheet. I keep track of this to make sure I know what's theirs in case they ever want to sell. But ultimately, this allows me to segue into something else that now happens in my portfolio. I have set up recurring buys. This happens every 2 weeks for companies VOO, VTI, VNQ, VYM, and EPD. I chose EPD because, as I said earlier, this is a position that I'm really trying to build at an accelerated rate. And here you have the breakdown of how much is going into each company. My parents do contribute to this every 2 weeks alongside me. I invest $280 every 2 weeks, and they invest $10 going into VTI and $10 going into VNQ. There was a lot of change over the last 3 months, with some sells and some buys. The sells are unfortunate, but are ultimately a part of the game. I manage my own portfolio, and I'm responsible for the decisions I make inside of the portfolio. I made goals in my last video, and I covered those earlier, and I showed you my remade cost basis tab. I would like to continue remaking that spreadsheet tool and make it a lot more pretty so it looks better for you whenever I make these videos. But I'd also like to mention something else I'm using alongside that spreadsheet tool. As you guys can see, I'm on Dividend Data's website. He is a YouTuber that I would honestly say has been a key reason why I started investing. I know last video I mentioned guys like Graham Stephen, Mark Tilbury, Audrey Jick, but I would honestly say that Dividend Data and Gen X Dividend Investor are the reasons why I got onto the path that I am today. I started paying for the breakdown because I really like being able to see some of the diversification. I know this is on Robinhood, but I'm not able to like truly break down each individual thing. But I'm also able to get insights on my dividends, access to all news in one area, valuation, projections, and other research tools. This is something that I went into not 100% knowing if I was going to keep it long term. After being a member for a month, almost 2 months now, being able to see my total annual income per different stock, see my drip shares, it's very nice to be able to see. And I know it's something that I could do on my own, but this is all updated automatically for me. And $10 a month isn't that much of a price to pay for something to be done for me. I hope this isn't a disappointment to you, but this website is going to be something that I plan to show a lot more in the videos. Whenever I cover something, I'm able to get a lot more breakdown than I do on Robinhood, so be prepared to see this website a lot going forward. Before we start wrapping up this video, I would like to look at the year-to-date of my portfolio. As you can see, we peaked at about 5.6% above our opening at the beginning of the year and are currently sitting around 4.82%, which I'd still take considering last year we were down, I think, 16%. We have covered a lot. As far as what I plan to do going forward, I plan to keep investing while utilizing the recurring investments. I think after quarter 2, I'll comb through my portfolio again. This is something to make sure my mindset and heart are aligned with my goals. I look forward to a year of investing and achieving my goals. Before I outro the video, I'd like to shout out my thumbnail artist. I usually link his Instagram in the description below, but he recently has created a website and a YouTube channel. I would appreciate it if you check out his content. He does commissions on art and has also started making YouTube videos, as you can see on the screen now. He's also an incredible help to me in terms of the thumbnail creation process. If you remember, our thumbnails used to look like this, and as you can tell, very low res image, this was made in 3D Paint. Without his help, our thumbnails would not look like this. I love the thumbnails. They look a lot better than what I currently have the capability of doing, and I would appreciate it if you can go check out his content. All 3 links will be in the description to his Instagram, YouTube channel, and website, and show some support. It would be greatly appreciated. I will be sharing my Robinhood link in the description below if you're interested in starting your own investing journey. I will note again that I am not a financial advisor, and if you are looking for financial advice or advice on what you should do with your money, I would recommend seeking out a financial advisor. With that all being said, I hope you all enjoyed the video. Feel free to drop a like and subscribe, and with all that out of the way, thank you all for watching, and I'll see you next time.